Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. US President Trump is making progress in bending independent agencies like the Bureau of Labor Statistics and the US Fed to respond to what is best for him rather than the US economy. But the week ahead will be all focused locally on Wednesday's household labour force survey results for July. Our jobless rate is expected to rise to 5.3% from 5.1% in June and May. That would make it its highest since 2016 and exceeding anything we had in the pandemic period. Elsewhere, the week will feature a raft of PMI and factory order releases, plus China will release key trade and inflation data. But the big economic driver for the week will be market reactions to Trump's tariff-war moves and his drive to bend both the Fed and the economic data agencies in the US to show fealty to him and avoid any negative reports. On Friday, they sensed all of this isn't good for the US economy and turned sharply risk-averse, even though corporate earnings reports have stayed positive. And that was because of Trump's response to the official data he didn't like. He moved to fire the head of the data agency who reported it. Then a voting Fed official resigned, giving him a chance to twist more independence out of this crucial institution. The release of the July US labour market report showed the headline jobs gain was only 73,000 when 110,000 was expected. But worse, the June data was revised sharply lower to just on 14,000 from the original 147,000. Their jobless rate edged up to 4.2%. The number of people unemployed for at least 27 weeks has now topped 1.8 million people, and the highest since the pandemic. Wage growth for the low-paid was unusually weak. This is a huge miss, and there were sharp financial market reactions. Those are the seasonally adjusted numbers. The actual numbers are much worse, down more than 1 million in July from June. But to be fair, that actual shrinkage is seasonal. But at 159.3 million people employed now, that is lower than in November 2024 when Trump won office. But with this July stumble in the labour market, it will be no surprise to know that the ISM factory PMI shows the same sharp retreat. In June, this PMI was contracting at a 49 index level. It was expected to improve with a small contraction of 49.5. An index level of 50 is the fulcrum between expansion and contraction. But it went the other way, deepening its contraction to 48 in July. Driving the retreat were new orders and order backlogs contracting, along with input costs increasing and exports falling. Overall, this is reporting the factory sector is contracting faster. The internationally benchmarked S&P Global Market Factory PMI version also reported a sharp drop in contraction in July, also largely on stagnating new order levels. In China, like the official factory PMI signalled, the independent Caixin PMI also signalled that their factory sector went backwards in July too. The Caixin survey isn't as negative as the official survey, but it now shows the overall sector in contraction. The Caixin survey tends to account better for mid-sized private manufacturers, whereas the official survey includes the very large state-owned enterprises. And China recognises the need to do more to stimulate internal consumption, so they're now committed to using subsidies as a key tool. Essentially, they're subsidising trade-in prices to generate sales of new items. The target is to raise the subsidy level to 300 billion yuan in 2025. On Friday, they announced another 69 billion yuan in long-term special treasury bonds, which will be issued for this purpose, the fourth tranche in the program. Another policy action announced on Friday involves their war on involution, which they take to mean excessive or irresponsible competition involving a general race to the bottom. It was a feature of their housing crisis and is a big worry for their car manufacturing industry. Top-down pressure to rein in this sort of behaviour is intense now. In fact, BYD is now indicating their production levels will be lower in the future. However, in Japan, Toyota has told suppliers that it aims to boost 2025 global production to about 10 million vehicles, underpinned by strong sales of hybrids despite concerns over the impact of American tariffs. In the US, carmaker Ford is noting that tariffs are not helping them. In Singapore, the latest PMI readings painted a mixed manufacturing outlook, with the electronics sector in continued expansion, whereas the overall manufacturing sector reverted to a marginal contraction. Declining now are new order levels that caused the shift. In India, the growth of factory orders and production strengthened in July, driving their factory PMI up to an impressive 59.1, although that was a touch less than the result expected. Indian factories are easily the star of the show on a global basis. The EU released its July inflation data on Friday, and there were no surprises there, with inflation stable at 2% in the euro area. The overall level is still being restrained by falls in energy costs. And Australian producer prices rose 3.4% over the past year to June, down from 3.7% in the year to March, and down from 4.8% in the year to June 2024. Cost pressures are still high, but they are easing, even if slowly. The US Treasury 10-year yield is now at 4.22% and up 1 basis point from Saturday, down 18 basis points for the week. And the price of gold will start today at $3,362 an ounce, up $14 from Saturday. And American oil prices have slipped back again, now just over $67 a barrel, with the international Brent price holding at $69.50 a barrel. A week ago, these prices were $65 and $68.50 a barrel. OPEC has agreed to a big increase in oil production. And we should probably note another fall in North American oil rigs in action, now down to their lowest level since September 2021. And the Kiwi dollar is now at 59.2 US cents and up 20 basis points from Saturday, but down nearly a cent from a week ago. Overall of July, the fall was 180 basis points. Against the Aussie, we're unchanged at 91.5 Australian cents. Against the euro, we're down 40 basis points at 51.1 euro cents. That all means our trade-weighted index starts today at just on 67.1, unchanged from Saturday, and down 60 basis points for the week. And the Bitcoin price starts today at $114,109 and up 0.8% from Saturday, but down 2% from a week ago. Volatility over the past 24 hours has been low, at just under plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.